Welcome back, you legends. I'm Dr. Cal. This is going to be a very quick update video, but a very important one. There's a lot to discuss. This past week, Legends has been driven entirely by the war in the Middle East, not really technically driven as much. We can clearly see that. Why? Well, because we saw energy, aerospace, and defense, as well as utilities outperforming the rest of the market. Remember, 2 weeks ago, we had tech outperforming, specifically semiconductors. We saw that leadership come back down, and we saw rotation out of semis, out of tech, and into these war-related sectors. Let's take a look at the different sectors again. Energy leading, followed by utilities and real estate. Energy, obviously, because if Iran is brought into this conflict, that will directly result in higher oil prices, lower production, and more supply chain issues. Utilities, a very highly energy price sensitive sector. That's why we saw energy leading, followed by utilities. Let's take a look at the daily chart for the S&P 500. 430 as support, held on Friday despite that massive breakout in volatility, higher than average volume, not high enough to overshadow that significant breakout that took place Friday the week before. So what are the key levels? Still key levels at 440, major resistance. Support, I would call 430 minor support. Major support is likely lower, and we're better served looking at the hourly chart for more granularity. Here's what we're looking at, legends. First, we had that sell signal that I discussed. We took our profit pretty much near these highs, booked profits once, and then again closed all of those calls that we opened here. As of right now, I'm in wait and see mode. I'm not really in a rush to open any new short or long positions. What I'm looking at is an additional pullback, roughly back to this slow moving average. This is the 100 exponential moving average. With some specific tweaks to the settings, you'll have direct access to this chart in the My Chart section in the Discord. So here's what I'm looking at. I'm looking at a pullback back down to the 100 period moving average. After that pullback is done, I'll be looking for a breakout above 55 on the RSI. That usually marks the bottom and a continuation to the upside. Again, pullback to the 100 period moving average, then look for a breakout on the RSI that usually marks the bottom, and we get another push higher. We saw that happen again here, legends. Pull back to the 100, a small breakout followed by a breakout above the 55. It called the bottom, right? So wait for a tag of the 100. The second tag is the bottom. Wait for the tag of a 100. The second tag is the bottom. Again, wait for the tag of the 100 period moving average. The second tag is usually the bottom. We haven't seen the first or the second, so I'm still waiting for additional downside, something that looks a lot like this. Then a second potential rally. We'll see if that fails well below these highs. We'll continue lower, potentially all the way down to that target of 418. If we break out higher, that will likely confirm this as the October bottom. Remember, legends, seasonally speaking, we do tend to get a lower low at the end of October. Again, if we look at seasonality, we tend to see this breakout in the first week of October. We already got that. Then we tend to see a continued selling, lower highs, lower lows, then the final low coming in at the end of October, roughly end of the third or beginning of the fourth week of October. That means the end of this week or potentially early next week, we could see the bottom form. This is all pre-election years after midterm bear, first term pre-election year. This is more in line with what we're looking at. These lows, potentially slightly higher low or potentially a slightly lower low. I am open to either possibility, and it honestly doesn't matter as long as we time the entry based on seasonality and based on some specific technicals that I'll discuss in a second. We'll probably time the slope fairly well. So what else am I looking for? Well, on the S&P 500, we're looking at, again, 428 to hold as potential support in the short term. Additional rallies, either a lower low, something that rejects at roughly 433.6, and then a continuation lower, right? Something that looks like this, or potentially if we make a higher high, we likely continue to 440. I'm open to either outcome, and quite honestly, I'm not really interested in trading all of this chop that's coming up this week and next week. I'm more interested in the bottom that will likely form next week. Take a look at the weekly chart. We had a rejection candle last week. That does not rule out additional upside. In fact, we had an identical rejection candle here, and we still rallied significantly. We also had a rejection candle here, and we ended up with a bottom just about a week later. So generally speaking, we are now bottoming. This is a bottoming formation, and we will likely see the beginning of a new significant uptrend by the last week of October, either with a lower low that establishes itself next week, or a higher low that again establishes itself next week. A lot of it is going to be news driven, rates driven, earnings driven as well, less so technically driven. Taking a look at the futures chart, we are now below all the moving averages on the 2-hour chart. Significant support. Where is significant support? Well, we can clearly see that this prior resistance was also support at one point, then again at support. So this is likely a major area of support at 4,320. So 4,320. This is going to be a major area of support. So look at buyers to step in at this level for a potential inverse head and shoulders pattern. Now, the VIX is also suggestive of a pattern like this because if you notice, legends, we did have a breakout Friday in the VIX. However, we saw something very similar in October of 2021. We had this breakout, but we ended up with a lower high on the VIX and a lower low on the daily price action. This confirmed a positive divergence, lower high in the VIX, lower low on the price action. That was the head of this inverse head and shoulders, and we had a massive rally in November. So again, we're looking at something that looks either like this, higher low, and a double bottom with a higher low, potentially again an inverse head and shoulders with a higher low. The second possibility is a lower low and an inverse head and shoulders forming with the head forming either next week or the week after. Let's take a look at the NASDAQ 100. Very large, I would say, breakdown structure. This is a very clear-cut gravestone candlestick structure, right? Indecision candle followed by a massive bearish candle closed near the lows. Really erased 1, 2, 3, 4 days of trading in a single day. This looks like a very large reversal candle, and we're now seeing rotation again out of tech into energy, into utilities, defensives in general, and we're seeing that again with the Dow Jones. Look at this. The Dow Jones made a higher low on a closing basis and on an intraday basis versus the NASDAQ 100. All of that plays directly into what the SPY is going to do, right? If the NASDAQ continues to show weakness, we will likely see significant downside still ahead for the SPY. Now, based on what happened with the VIX, I still expect some additional sell side action. This is a really significant breakout in the VIX Friday. So really, we cannot rule out additional downside until and unless we begin to see tombstone candles, rejection candles forming on the VIX. Not there yet. The 1-hour chart also still suggestive of additional downside on the SPY. Stochastic still not in oversold territory. The RSI needs to break out above 55 after price hits the 100 EMA. So additional downside. Stochastic enters oversold, then look for the RSI to break above 55 and look for a second tag of the same 100 EMA. That will likely form a short-term bottom that is tradable to the upside. What about the Russell 2000? Very negative looking chart, erased the entirety of the counter trend rally. Still major support below at 165. In fact, the full measured move for this head and shoulders pattern is, let's take a look, 163.5. So still additional downside likely for the small caps alongside the NASDAQ 100. Taking a look at the Dow theory model, Dow Jones Industrials up top, Dow Jones Transports below. Significant underperformance by the transports that will likely translate to additional weakness in tech and in the S&P 500 because it's still a tech-heavy index. Smart money up top, dumb money down below, slightly higher low on the smart money, slightly lower low on the S&P 500. Not quite the bullish divergence that I'm looking for. Very weak bullish divergence. PPO still hasn't produced a bullish cross, but we're getting very close. All signs point to a bottom forming in the next 10 trading sessions. Very likely by the end of October, we will have already formed a major bottom. What about risk appetite in the bond market? Still negative, no buy signal. What about the 10-year yield? Likely a top forming. We need to see closure below the 20-day moving average. Hasn't happened yet. We're still seeing candles forming above the 20-day. For a major breakdown, the 10-year yield, we actually need to see a close below the 50-day moving average. I expect to see that sometime by early November. DXY, the dollar index, buy signal. Let's see, October 6th, we had the buy signal confirmed with a cross down on the PPO and additional weakness in the dollar index. It broke out again recently, but it's struggling to make a higher high. Quite likely, the DXY will form either an equal high or a slightly higher high with a bearish divergence on the PPO, and that will likely coincide with the top in the dollar index. XLY divided by XLP, huge breakdown candle Friday. Again, this points to additional weakness in tech, Amazon, Tesla, etc. As long as this ratio chart is breaking to the upside, we'll see the S&P rallying. When it breaks to the downside, the S&P will be selling off. Let's add the S&P 500 here so we can see the correlation. Again, when it's trending down, the S&P is trending down. When it's breaking out, the S&P is rallying. Again, look at these rallies here, rallies again, roughly here, and now it is breaking down, likely to form that final bottom for the year. NASDAQ relative to the S&P 500, major breakdown candle on Friday, closed below the 5 and 10-day moving averages. That usually means additional downside is likely intact relative to the S&P. So I expect energy, utilities, defensives in general to continue to outperform the NASDAQ 100, at least for the next couple of weeks, as Tesla reports this week, Netflix as well. And we'll get a lot of semis like Lam Research, ASML, reporting this week. Additional tech and semis reporting next week. Likely sell-offs will ensue after those reports. And we're not likely to see major rallies until after the earnings season is behind us. That usually happens roughly in November and December. This is the S&P 500 relative to gold. Massive breakdown candle Friday. Gold is going crazy. S&P is weakening. However, gold is now at resistance. This is the 200-day moving average. It is a major resistance line. Acted as support once, twice, then rejected, broken through. It will now likely act as resistance again. We have this trend line rejected once, twice, and very likely rejecting again. In any case, this does not look like an objective long entry by any means. CPC put to call ratio still hasn't produced a buy signal, getting closer and closer, not there yet. PC put to call ratio buy and sell signal, not there yet, getting closer. NASDAQ submission index produced a bullish crossover. The NASDAQ submission index, same thing. So again, all of this points toward sell-offs being bought. This is the green light, red light sort of indicator. As long as we're trending up on both the NASDAQ submission index and the New York Stock Exchange submission index, we're likely to form higher lows and higher highs. The dips are likely to be bought and rallies are less likely. to be sold, especially after that bottom forms in the next 10 trading sessions. In the meantime, we'll likely see a lot of chop. What about breath? 50-day breath rejected below the 50-day moving average. It did produce a buy signal just early last week. It is now weakening. 200-day breath did produce also a buy signal. It is also weakening, showing signs of a reversal. Hopefully, what we'll be looking for is either a higher low on the 200-day breath or the 50-day breath, as the S&P 500 potentially makes an equal low. What about the fear and greed index? We had a bit of fear coming in at the end of the week, still not really in that extreme fear territory that we saw in early October. Market momentum rejected just at the 125-day moving average. Not a great sign. We need to see price hold above it. Price strength still weakening. A breath trying to form a bottom here. Put to call ratio dropped significantly, but we need to see it continue to decline. Market volatility, massive bounce off the 50-day moving average. Very bad, very worrying. I would say red flag. As long as the VIX is trading above the 50-day moving average, the market is officially in a downtrend. Even though breadth is improving, even though the CPC, PC, buy and sell signals are improving, even though we have a lot of these signs improving, the VIX needs to break below the 50-day moving average. What about seasonality? We tend to see some upside until about the middle of October. So we're already there. We're about here as of right now. And we should see additional downside with a bottom forming roughly by Monday of next week. Not this week, but next week. In terms of economic events, Monday, not much going on. Tuesday morning, we'll have retail sales. Wednesday, we'll have building permits. Thursday, some jobless claims and the Philadelphia Fed Manufacturing Index. Friday, not much else going on. So this week, driven a lot by news events, developments in the Middle East war, as well as earnings, big tech earnings, things like Tesla, Netflix, semis, Lam Research, etc., and potentially seasonality, allowing the market to put in the final bottom for the year. If you want to trade the market with me, check out the Money Time Machine trading community. The link will be in the description below to join us through Patreon. It's about $35 a month if you go for the annual membership. It's a single annual payment, however, it averages out to roughly $35 a month. And it's the absolute best way to support the channel and allow me to bring more of these videos to you, Legends, completely for free. So to summarize, Legends, very short term, likely some additional downside potential support likely at 428 on the S&P 500. On the futures, likely roughly around 4,320, somewhere around there. On the 1 hour chart, look for a double tag of the 100 EMA. Likely the second tag will form a short-term bottom that's tradable to the upside. Now, we'll likely see something that looks potentially like this. So a lower high forming, then additional downside. Right, again, something that potential looks like this, lower high or equal high, then additional downside. And this will likely form the low for the year. VIX still very worrying, above the 50-day moving average. Major breakout Friday at resistance. Major resistance at 25. If we get a massive sell-off, we'll likely hit 25 by the end of the month. Otherwise, look for an equal high or a slightly higher high for a bullish divergence with the S&P 500. In terms of the 10-year yield, it is showing signs of a top. However, it needs to close below the 50-day moving average. The dollar index also showing signs of a top. It still needs to break below and close below the 20-day moving average for more than a couple of days. Relative ratio, XLY divided by XLP, NASDAQ relative to the S&P. So risk on versus risk off. We're seeing risk off. The market is very nervous heading into this earnings season. S&P relative to gold, massive decline. Gold is breaking out. The S&P is breaking down. This is a major sign of a risk-off move, meaning be very careful going long at this moment in time. CPC and PC getting very close to buy signal. Still no buy signal. This is a very prolonged period of weakness. We haven't seen anything like this going all the way back into the bear market of 2022. Nothing like this. This is a very prolonged period of weakness and nervousness that hasn't ended yet. This entire downtrend that began at the end of July has not ended yet. It is getting close, very close to an end, likely coming to an end with a major bottom forming by the end of this week, potentially early next week. NASDAQ summation index and New York Stock Exchange summation indices both producing a bullish cross. That means we're getting very close to a bottom. We just need confirmation from the CPC, the PC, the VIX. All of these need to give us confirmation to have more confidence to go long. S&P 500 50-day breadth has produced a buy signal. However, it is weakening below the 50-day, and the 200-day breadth also weakening. These need to improve significantly need to improve, and soon. I need to see a close above the 44 reading on the 200-day breadth. That will likely confirm a new uptrend. Not there yet, but getting close. That's it, folks. That's all I got for you. I hope you found it helpful, and I'll catch you in the next one. Bye-bye.
Oh, wow.